Hello everyone, my name is Rohit Nayar and I'm representing LabMath Financial Services. We're in this field from the past 35 years and I'm the second generation business. Today we're going to talk about a very interesting topic and I say that is passive income is no longer a luxury, it has become a necessity. And I'll tell you why. Any developing country, when the country develops, what happens is people are made to spend more. If you see the latest taxation also, new tax regime and old tax regime, the new tax regime does not talk about any sections and deductions. It simply says you can spend whatever money you want. This is a tax slabs we get into. Old tax regime was more inclined towards saving in ATC, ATD. You plan investments, insurances, Medicams, different instruments where you can park your money and get a deduction. New tax regime does not have that. What it is implying is you can use your money the way you want and putting that money in your pocket. It's not tax. What will people do? You will spend more. Now think about it. With the generation we have today, where saving is not the primary motto, and we're going to spend a lot more, when these people are going to retire, they'll have lesser corpuses created. I'm not saying all of them. Let's say 20% of them do manage to save money. But 80% of people are going to suffer this problem of having less money with them, expenses shot up, repo rate reduced. So they put that money in the bank and they're going to get very less interest on that. They've not planned their investments properly. So money receiving in the form of passive is almost negligible or zero. Is either in a property, the money is either in some asset class where you have to either sell it to get money, and I don't call it passive income. Passive income should be something where you don't use your mind, don't use your time, but money is coming to you automatically. Every month, first day of the month, money is credited to your account. I'll call that as passive income, right? So I feel everyone should plan for a guaranteed passive income for their future. If you don't plan it now, you will regret later because later on, when you want to have such instrument with you, the interest rates have gone down. Instead of needing, let's say today, if we have 1 crore rupees, annuity generally pays you around 6 or 6.5%. Like you'll get 6.5 lakh rupees a year. 10 years ago, it was somewhere around 10%. So for the same 1 crore, 10 years ago, you could get around 10 to 12 lakh rupees. Today, you're getting 6.5 lakh. As the country will develop, the sanitary rate will keep going down, repo rate will keep going down. Planned investments where you save and create a portfolio and then get returns out of it also will have lesser amount of interest rate. So if I can remove only 4% or 5% on the purpose that I have, and in the future that number is going to reduce down, then it means today I have to start planning and saving more and not to worry about the fluctuating interest rates. So plan for investing in such instruments which are passive, guaranteed, gives you fixed interest rate, not connected to the rate. So an ideal one, which I personally feel, is buying yourself a passive income plan. Generally, insurance companies give you a passive income plan. If you buy a passive income plan for yourself, not looking at the repo rate or interest rate that it is going to give you in the today's date and time, but look at it after 10, 15 years, then you're going to get that as passive income for the next 25, 35, 45, 50 years, as long as you live, right? That is an effective chunk of money which will come to you at a higher interest rate in the future. And that is going to give you one simple thing: peace of mind and dignity. Think about